Good afternoon. Today is Tuesday, April 20th, turnaround Tuesday. What direction did the market go today? Did it turn around? Today, what we're going to do is we're going to go over the members watch list, people who sent me the ticker symbols by market close. We're going to go over those stocks. And the first one we're going to look at is PENN. I had a little bit of higher hopes for PENN. And by the way, guys, I'm going to try to slow down on my speaking a little bit. I talk pretty fast. What we're going to do is underneath the video, I'm going to go ahead and post the timestamp. So feel free to go down to the stocks that you want to look at and go ahead and fast forward through the video if you'd like. First one we're going to look at is PENN. It was pretty evident at the market close yesterday that it was going to be a continuation down bearish in a bearish case. We don't always know that it's going to do that, but it's a pretty high likelihood based on the closing price of yesterday's close. And then of course today we got the continuation to the downside. Now it doesn't mean that I would necessarily short PENN at these prices. It just means that I wouldn't be really willing to go long unless the price got back above 97.09. And so right now, this kind of candle right here, yes, it's technically an indecision candle, but we don't really know which way it's going to go yet. I am not convinced that this is the bottom. I would probably be looking more towards the 200 period moving average and this support in here, which we haven't been to in quite a while. The last time we were at the support was on January 4th. Or around January 4th, and it was a prior breakout area. So if it falls one more day, I would expect some sort of buyers in this area zone in between $80 and let's say between $80 and $82.72 if we get down there. The only other way I'd be a buyer in this, like I said, if we got back above $97. And so right now it's just kind of a waiting game. We're gonna see how this plays out over the next couple days. If I go down to the hourly time frame, just kind of take a look at what we can see. On an hourly time frame, you saw that where it broke support. And just another heads up, by the way, guys, I kind of say this, I don't know if how many of you guys watching right now know this, but when we see a support level like this, where we see multiple areas where it tagged that support area, and then what we see recently, you saw this consolidation pattern in here. There's some people were looking at this as like a bullish consolidation, which could have been the case. It could have played out to the north side. One thing though we have to kind of realize is that the more the ball bounces or the more that we knock on the door, the more likely it is that we fall through. So keep that in mind. Just like when a market is rallying up higher and you have resistance up here and it hits it once, twice, 3 times, and then the more it knocks on the door, the more likely it is to go through that. There's a little bit of technical analysis for you, but the kind of, I don't know, the writing that was on the wall was basically this hourly close below 97.09. This close down here was a very important close as far as for the bears. The bears wanted to see a close below support, and that was the close. Now, there's nothing that says that it couldn't have or still can't rally on all the way up here, maybe even back test this area. But for me personally, I'm waiting for some sort of consolidation, maybe some higher lows before I would take a long trade out of this, because we don't know where the bottom's going to be just yet. As far as intraday time frames like the hourly chart or the 5-minute chart, it might look like a reversal. You just got to be careful. Same thing we kind of saw in the broad market today, and I don't mean to jump around on you guys. I just wanted to kind of dive into the hourly time frame down here on the broad market. It kind of looked like maybe the SPY was putting in some sort of bottom here, which could be the case, but I highly doubt it. Looking at the hourly chart, even though we did take try to take a SPY to the long side, picking up some 420 calls. But this pattern in itself is bearish. I know that it looked like a bottom intraday, but the more that I think about it, the more this does look a little bit more bearish to me. And I think we need to psych out some more bulls. I think we might even see a drop down here to 405. Maybe even this area right at this support area. Maybe let's take it. I got 75 lines on the screen. Maybe around 406, 407, somewhere in there. But as of right now, we'll see what the SPY does. Okay, I'm done jumping around on you. Let's stick to the plan here. Okay, so the next one is CRWD. CRWD, we saw a little bit of a down movement today. Overall, it looks like it could burn off a little bit of steam. It had quite the rally off the lows down here, 29%. So it's consolidating in time, and that's actually something we do want to see. It's a little bit more bullish to consolidate in time, meaning go straight across, rather than consolidate in price, meaning a pullback, some sort of retracement. If I go to the daily time frame, you kind of look at the daily. pretty bearish close today, and we are at support on the day. I'm not convinced that the price is going to stay around 206. I think we'll see a little bit more to the downside. It doesn't have to be a sell-off. It could just be a little bit of profit taking. This candle, just for a little bit more technical analysis for you guys, I wish I would have seen this intraday. I would have said something if I saw this, but this candle in itself is a bearish reversal type candle, and you have confirmation, which is this candle we saw today. So yesterday's bearish reversal, today bearish engulfing. I would believe that we'd probably come down a little bit further. I don't think the support's going to hold. And by the way, this analysis doesn't mean that this stuff is going to happen. It's just the things that I see on the chart. So if you are in a long trade and you want to consider seeing what the other side of that trade is, we'll plan on me being the other side of that trade. I'm going to kind of give you both scenarios. And that's the thing, is this can be also a bull flag pattern, which is a bullish pattern. So if price stays up here, the more that it stays up here, the more likely we are to see higher prices. But I would not take a trade based on that. I don't see a clear trade setup in this just yet, unless we got over $215.31. Or if we see us pulling back in here, maybe some sort of 50% retracement down to 192, 195, somewhere in there would be ideal. But we'll see how that plays out. Next one, CHWY, CHWY. So same thing, same kind of thing. We're knocking on the door of support. So I believe, just looking at the daily chart, the first thing that jumps off the page is this bearish three bearish days. Now, if we don't see higher prices tomorrow, we really need to get back above today's high for starters. Get back above today's high, because overall what we see is a bear flag pattern, and it's most likely going to break support either overnight tonight or tomorrow. It looks like it wants to break support. Again, like I said, if you flip this chart and we were doing the same thing but in this direction, and we just kept printing something that looked like this, I would think that more likely we're going to break out to the upside. It's not every time, it's not every day, but this chart here has been knocking on the 200 period moving average for quite a while, since March 5th roughly. And so I think it's just a matter of time before we fall down in here. As far as downside targets, if you wanted to possibly scalp some sort of bounce trade, I think that we could see a bounce around 66.44. Maybe even right here at, let's say this, maybe around $70. I think we can find some definite support around $70, and that's this area in here. And the reason why I'm saying that is because you saw how the market came up to that price area, it found resistance there, and it finally broke out of there. This is a breakout period back here, and so that if the market came back down to that area, I don't think that it'll just shoot right through here on the first go around. I think that it'll take a bounce, some sort of bounce in there, and then you could possibly take a bounce trade out of that if you are comfortable with doing that. You could definitely take a bounce trade out of there intraday. I just don't know about swing trades. PLTR, and I really don't mean to say basically the same exact things I've kind of been saying in the last several charts. This is more of a pinch play. What do I mean by pinch? I mean, we're getting pinched in between the moving averages. You saw this area up here, and then you see this area down here, and we're kind of getting pinched, consolidating. We wanted to already see prices rally, which we haven't really seen. I was looking at PLTR today intraday, deciding or trying to think about taking a trade. I just didn't really feel comfortable with it. I would much rather let the price consolidate and then break out to take that kind of a trade. And so just looking at the daily chart, it looks like, just like the other ones we looked at, it looks like we could possibly see lower prices. The difference between PLTR and CHWY is that I don't think the likelihood of PLTR going down is the same likelihood that CHWY looks like it wants to go down. I think it's a little bit different. I think that with PLTR, we might see a lot of fighting in this area with the bulls and bears until eventually we see a break of support or a breakout above resistance, and then we'll know for sure which way the chart wants to go. If I go down to an intraday time frame, let's just start with the 2-hour time frame and really kind of zoom in here. And the very first few things that I see is we do look like we're fighting this area, right? The bulls are showing up to defend that area, which by all means they can, and that area can definitely be held as support. But what I'd be looking for right now is, instead of taking a trade off of support at this point, what I would be looking for is a higher low kind of scenario, something like that, and pick up one of these higher lows. You could even pick up one of the higher highs, as long as you know where your stop loss is going to go, where you would be stopped out at. You could take this support trade right where it's at right now and just say that, you know what, if we got below, let's say if we got below $21.05, If we got much below that, then we could go ahead and stop ourselves out of the trade. I don't think that scenario is a very high probability, low risk trade setup. I think the better scenario would be to wait for price to either break out of some sort of falling wedge pattern like this, or wait for it to simply get back above resistance around 2380 to begin with. So let's look at the next one, EBON. And let's go back to the daily. EBON, and sometimes when I see a chart like this where I don't know where the clear trade is, it's technically at support right now. I don't know where the trade is at on a chart like this. Sometimes I like to go to the weekly chart and see if I can see anything else. So we're definitely at support right now. Again, I don't necessarily know if I like this kind of support trade, although there are times I like to buy at support and sell at resistance. I mean, that's a good scenario. That is something you could do. It's really trader's choice. This kind of setup isn't ideal for me. We could see a bounce up into here, and if we did, I would say around $7.50, $8 is going to be a pretty heavy resistance area. But I would also say the same thing kind of around this area right here, around $6 is probably some resistance. If you're already in this trade, what I would do is I would put a stop loss just underneath of here, maybe around $3.70, maybe have a stop in there. It's looking pretty ugly on the weekly time frame. The daily chart, it's looking, it's just a little bit volatile for my kind of trading setup. If you're looking to take a long trade, another thing that you could do is you could wait to get above the, let's say 522. There's going to be some resistance in there. And that's this area right here. And I only say that because price fell through that area and then it's having a hard time getting back up through that. So if you see it can hit that area again, pull back, and then it makes a run for it, maybe that's something you can take a long trade out of. JNJ. So JNJ, very bullish day. This is something that we like to see. And remember what I was saying before, where it's knocking on the door, right? So I kind of see this pattern in here where the price is, it's hit it once, hit it twice, hit it 3 times. It's really knocking on the door. We could see consolidation all the way down to the low of this breakout candle, and I would say that probably around $160. Let's just call it $161. We could see consolidation in this area, maybe some inside bars. Maybe we will break out. Maybe it'll be a gap higher in the morning, and then we'll just take off on some sort of good news. But I do like this chart. As far as taking a new long trade right where the price is at, I'm not so sure, only because it just came from, you've had a 6.5% run on a name like JNJ. That's a pretty big move in a matter of a week. So for something like this, I would want to give it maybe a little bit more time, let it consolidate a little bit, let it put in a higher low. As far as intraday trading, you definitely can do a little bit of intraday trading. And if I zoom in intraday like this, and you know, I do like this. I like the pullback. You could have bought that pullback today, but it's right into resistance. So we just have to be mindful about where it's come from, how far it's run, and where the closest resistance is, which is probably around 167.50. Next one, Apple. Apple, I think a lot of these names are coming into earnings, so we just got to be really careful either direction we go. I do like Apple's chart as far as taking the breakout, going long back here at the end of March, going long. And the thing is that right now, the type of move that Apple has had, we've already ran 11% within a couple weeks or a few weeks. So it just needs a little bit of time to consolidate its gains. And so there's nothing wrong with that. There's nothing wrong with this trading sideways, consolidating in time, which like I was saying is more bullish than if we consolidated in price. And I do like this chart. I think that a little bit more consolidation and a nice buy signal was getting above these highs, because we've been consolidating now for about 4 or 5 days. So if we started getting above 135.20, somewhere in that range, if we got above there and started trading above there, that would be a good time to go long. Or if we saw a pullback down to some sort of support level down here, maybe a gap support around 128.94. But since we're on the subject of Apple, I think it's a good idea to look at the Qs and see what they're doing. And I think it's a good idea to look at the SPY to see what it's doing. We want to look around the market. As we know, the Qs are 40% tech, or 40% top heavy with the FANGs. So Apple being the biggest one, I think it's a good idea to look at what the Qs are doing. I see that we are down after hours, so I'm assuming that Netflix had some sort of bad numbers, probably had some sort of bad earnings report. So this is where we have to be cautious. As far as the Qs go, this does not look necessarily that bullish as far as today's candle by itself, but we are you know, up here on the chart, we're up all-time, pretty much close to all-time highs. It's hard to say that this action is bearish, but it's probably a little bit more about profit taking. And for me, I would just want to stay away from the Qs for now. Let them burn off a little bit of this energy. That was quite the move, so we definitely want to let it burn off some of its energy, let some new buyers show up and get involved. And so going back to look at Apple, do I want to go long right here? And for me personally, I would not be interested in a long trade. Although I think after a little bit of time of consolidation, I think that it's possible to see higher and higher prices. Oracle, ORCL, absolutely beast in Oracle. You could, at these prices, I just don't know about personally going long. I'm not one to take these kinds of trades. If you're a day trader going intraday, I think that's fine. But taking a trade while the price is way up here just doesn't make a whole lot of sense to me as far as risk versus reward. You do have a daily reversal candle, so if you're interested in taking a short trade, which I know it's trader's choice, but this is technically a reversal candle. The high was $80.21. But a name like this type of a run up, I don't think that this candle by itself is enough evidence to me that that would be a reversal candle. We're not on, it's on pretty heavy volume, but not the craziest, heaviest volume I've seen in this name. So that is something to kind of be mindful of and watch out for. We are getting a little bit extended. In a few weeks, we have run 20%. And again, that's pretty high number for a company like Oracle. So beautiful. It looks absolutely great. If you're already in the trade, there's no reason to get out of it. You see higher highs and higher lows as far as these candles go. You saw a little bit of a hang up right here. That was a little bit of consolidation. Other than that, it's pretty much been higher highs, higher lows for the last several weeks. So well done if you are in that trade. Maybe just raise your stop loss up to 76.95 because it can kind of bounce up in this area before going higher. NKLA. Daily chart looks ugly as far as the last year goes. Let's go to the 2-year. We are printing new lows on the 2-year. This might even be all-time lows. This is pretty ugly. I don't know how else to say it. Let's go down to intraday time frame. There's nothing on the daily chart that jumps out at me and says, you know what, this is a bottom. We're below all 3 moving averages. We could possibly see some sort of trade in here if we drew a trend line going down at an angle, like some sort of falling wedge. But let's take a look at the 2-hour. Same thing. It's getting uglier and uglier. Let's look at the 1-hour. I don't like it. You know, can you imagine being the buyer up here on $93.99? If you told me that this stock would be around $10 in 6 months from this high, or however many months it's been, 10 months or 11 months, 10 months, I don't think I would have said you're crazy. But this is kind of the thing that we see in trading all the time. You see these kind of prints where since then it's been lower highs, lower lows. I would stay away from this one. It doesn't even matter what they do. I believe it's cars, electronic vehicles, but it doesn't matter. I would just stay away from it until it provides us with a lot more evidence that it is in fact a bottom. TDOC, TDOC. I like the name. I like this company. I think that this could definitely see like a little bit more consolidation. The problem with something like this is just like the last chart that we just looked at. Is this the new high 308? And we're already down here at 180, consolidating right on support. And we know what we already said about that. The more it consolidates after a down move, the more likely it is going to fall down to this lower area around 147.71. I already have a support line in there, and we'll see what happens over the next several days. Another way to look at this, if I go intraday, there's something I just kind of see from here. Intraday time frame, if I go into the hourly chart, I do like this curling behavior. When I look at it like this, I see something a little bit different. I see a little bit of curling action. And so for me, what I would like to do is I would say, you know what, if we got above this area right here, I'd be willing to take a long trade, and that's 193.72. I would wait to break above that and then possibly go long. We could be targeting this first pivot up here around 206.45. Above that, we have 216.12. Above that, 231.44. MRVL, and this is the last one for those of you guys who have been patiently waiting. MRVL, as far as this one goes, we're still pointing downward. I would want to see some sort of reversal candle in here on the daily time frame. Again, earning for all of these stocks that we just looked at, I don't know when their earnings are, but anything can affect this going into earnings. So I would just say know what the earnings are for each one that we are looking at, and then use that to determine whether you want to take a long trade or a short trade. And then we have to be careful because it's earnings. We never know what's going to happen. So the next support level that I would personally be a buyer at, if I was interested in going long on this one, would be around $44.58. And what I'm looking at is, if I zoom in here, just to show you the candle, I'm looking at this candle right here where it's kind of a, in a way, it's a breakout. I know it's kind of a weird place on the chart to call it a breakout, but we see that was the last day of this bullish consolidation in here, and then it took off from that area. So I would say price coming back down to the bottom of that bull flag would probably be some other buyers showing up in that area. And I don't know necessarily if it's going to hold on the daily time frame, but it'd be worth taking a trade intraday at least, and then seeing how they close the day. I think that's one area we could look at. Another area that we could look at is probably around, let's do this. Where's this falling to line at? Maybe around here, if we spike that 200 period moving average, spiked it by a little bit around 42.74. I don't know that it's going to go all the way down there. I'm just saying if it did go down there, that's an area that I would personally be willing to step in front of that and be a buyer. Another thing is we could just wait for the daily reversal candle, let it come down, let the bull show up, let it consolidate, let it put in some reversal candles, and then pick up one of these higher lows or higher highs, putting a stop loss just underneath wherever the bottom is. Okay, that's it for these charts. Thank you guys. If you liked the video, feel free to hit the like button, subscribe, bell notification. We go live on Sundays, usually Sundays, 5 p.m. Pacific Standard Time. We will see you guys in the next one.